Good day, traders. Dale Pinkert here at TradeGate Hub. We're going to be the best platform out there on the net. So look forward to you guys becoming part of this community and not just an observer, but also a participant and collaborate. You know, a lot of people in this industry, they isolate each other. They isolate from people. So I say don't isolate, collaborate. And if you had been on our platform earlier before the inflation number came out, check my posts. I said, look to sell rally back towards 90.70. I'll clean it up, guys. The high on my platform was only 65.2. And I came on that conclusion based upon the big breakdown day we had on the NFP Friday. And if the dollar is going to continue its decline to make new yearly lows, you know, last week I was a dollar bear, did okay on this, was out for the NFP, thankfully. Just a discipline I have not to be involved in the markets on big red numbers. People got used to economic numbers not really mattering, and they're mattering. So I don't like to play. I'm a trader. I'm not a roulette player where I bet red or black, and that's what you do when you sit in front of these big numbers. And now the inflation numbers, since they're becoming more and more of a market narrative and focus of the markets, you have to pay attention to the CPIs and PPIs. So we had very strong number this morning, inflation number way over expectations, and the dollar, which broke down yesterday. You use news events when you have a direction to fade. And I was talking about, like, I was thinking this was going to be more of a bottom than ending and terminating here. You know, I do take to heart. I used to be, when I was earlier in my career, I was much more stubborn, and an expression that changed my mind. And I'm not saying I'm a Gann guy. It's very complex type of analysis. W.D. Gann believed that time meant more than price. So he didn't care what the price was, because he knew he'd have a turning point in a certain time window. And he's most famously known for calling a turn in the wheat to the minute for a major turn. So, something to keep in mind. Here's his expression. I say write it down. There's something about writing things down. That's why they call me coach. I guess I can't help myself. But when you write something down, it leaves more of an impression on your thinking, because NLP, neuro linguistic programming, by taking the act instead of just reading something, if you write it down, or even if you declare it and say it, is going to have more impact on your psychology. Because, you know, one of the TradeGate Hub banners that I use is my expression of, just like real estate is location, 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 trading is psychology, psychology, psychology. So anyway, so far it would have been a good day trade. If you're going to stay with it, I don't think you want to stay with it with closes back over this moving average on the 4 hour, back over 85, because then we start to negate the breakout. Good morning, Daniel. How are you? Welcome back to TradeGate Hub. And guys and gals, if you're watching this stream on YouTube, we're starting to get an audience. If you like it, press the like. If you have any comments, I'd be happy to answer them. In fact, you could come in here to TradeGate Hub. It's a very simple registration, and take the tour and catch all the live streaming. Mike Venezia, we have Element now. We're also beginning coverage in Asia. So we have Europe covered, Asia covered, and the US covered. Something that I noticed in the main chat yesterday, I've been negative. I was long, I said as long as we hold 12 on the SQQQ, which we did, never closed under 12, tagged it yesterday. This is the triple leverage bearish QQQ. So talked about it last week. It's performing well again. The line in the sand or closes under 12. You know, intraday you'll see a lot of spikes and tails. This close here was not under 12. It tagged it was, 1205 and closed at 1212. So looks like we, could be setting up for another push up here. But something I did notice that yesterday for the first time when the S&Ps were really caving, uh, I noticed Mike said it's just rotation. And if you're an individual equity stock player, you don't have to go any further than here at TradeGate Hub and listen to Michael and his stream and his posts because I'll tell you something. He's like having, I don't know, 10 analysts working for you because he has an ability that a lot of people don't. It's being able to absorb and use information plus his experience of probably like me early in his career making every mistake possible and then learning from those. So he did say that we were starting to rotate, and for the first time, like here's the S&Ps, I believe we're probably pushing a new low. We did push a new low, and NASDAQ is holding the low. So Michael began to notice the rotation out of probably, cyclicals, values, oils back into big tech. So this is your first sign. I haven't seen this in a while. All the way down, it was NASDAQ leading the way. It's been a much deeper correction. S&Ps have made successive new highs with the NASDAQ failing to do so. We now have a VIX trading over this 19 level. A lot of people are saying, see back here in the VIX, everyone? Yeah, I agree with you. I'll get to the metals in a minute. Had a couple of decent trades there, Shiraka. Glad to see you. Nice to see your work. Appreciate it. Giddy up. All right. So yeah, this is important action because everyone here, I remember people said the same thing about gold when it was trading in the year 2000 at 200. They were saying, "Oh, gold doesn't work. It's broken. It's an archaic relic. All it's good for is a paperweight." And people starting to say the VIX is broken. It really doesn't reflect market volatility. It's not broken. And then, a lot of people sell volatility, which, 80% of the time, maybe even 90, you make money selling vol. But it's at one time you're short volatility, and there have been examples of it, that all the nickels that you pick up on the street selling premium, selling vol, you get steamrolled. Okay. This I wouldn't call a steamroll. 50 on the VIX, those guys are going to get murdered again. So be careful if you're an option writer and selling vol, especially after, I call this almost a 30-year bull market from 1982. Excuse me, almost 40. A two-generational bull market. The low in the S&Ps, the Dow, I believe back then was 760 on its way towards its first breakout over 1,000. It's amazing. Makes me feel really old to know that I remember the day and I was trading the day the stock market bottomed in August of 1982. But, I guess you have to do the time to have the honor of people calling you the coach, right? So, VIX, until we close back under 19, I don't know. I'm trying to keep an open mind because you guys know I've been bearish for a week. And in the NASDAQ, if we could just dig in our heels here pretty soon without, breaking, say, 12.8, I think there's still a chance for another shot to the upside for new highs. Okay. So short from up here, look at this weekly glaring divergence, and we've headed down. So look at this. So even at the highs on the weekly, we've been diverging since before the COVID high. Now it's pretty aberrational, but here's drive one. See that? Here is the RSI. God, even from this high, look how long we've been diverging from this high to these highs. So, okay, 68 reading. So if NASDAQ could dig in its heels before taking out this low, we could get one more for a 3. Can everyone kind of see that? See the two recent highs on the weekly? So, I trade a 3 drive formation. I didn't make it up. It's not mine. I didn't create it. Solomon said there's nothing new under the sun, and there isn't. So I credit J.R. Hill in the 70s. I learned about a 3 drive to a bottom formation, watching it coil up like a spring. And then, I was always interested in RSI. So I married RSI up to the 3 drive formation to kind of have parameters for what are higher probability 3 drives and lower probability 3 drives. So I think this would be a very high probability 3 drive if it happens. Maybe we hold together. We've been rallying pretty much all spring, right? Like back here, this is March. Okay, so this is the spring equinox right here, right around the end of March, these two candles. So we've been rallying pretty much all spring. It'd be nice if we rallied, into the solstice, which is going to be. So I do watch a few things in again, June, I believe 21st or so, a little over a month away. We start digging in our heels, and people are moving back to um, the large cap techs. That we could have a third drive up here that could set up. I mean, I do think there's a 30% correction coming. And the S&Ps will see if they have enough juice to, this is only their first down week. See how NASDAQ led it? Okay, it's been topping for a month. And S&Ps actually made a new high on Friday after the NFP because the Fed was going to take rates to negative 1,000. But we're sitting right here. We're on the verge of a 2-week reversal. There's no way I could say, the S&Ps look good. All right. It's almost like I could at least imagine how, because we've already had a correction. Maybe this time the NASDAQ makes a new high without the S&Ps, but very negative candle, weekly candle. And this is going to be its first 2-week reversal in the S&Ps. If we close to have a weekly reversal, what day do you have to wait for? Anyone know? It's a I'm a very tough professor. This is your pop quiz. What day does a weekly candle close? Anyone know? Mike? Mike, do you know? Element? Okay. Well, yeah, you're correct. Friday at the close is the end of your weekly candle. So we're 50 handles under that 2-week reversal. It's a very simple method. This too is not new. I learned it from a newsletter writer, Eric Haydick, who I used to follow. He does a lot of stuff with numbers out of Naperville, Illinois. And all you do is count back 2 candles, see where the close is. And if it closes above it, you have continuation. If it closes beneath it, you have a 2-week reversal. It's like the market has a memory to the left for about 10 trading days, and that becomes an important number. And sometimes they end up being pretty close to inflection points. So I write them down every weekend, and I'm paying attention to these off numbers during the week, even though I'm using not weekly time frames to swing trade and scalp. I'm using the 4 and the 2, and the shortest time frame I would use is 15-minute. Okay, so market recovered from that sell-off here. We'll see. Almost here, it almost looked like a three drive, didn't it? Well, we have two, one, two. See how we're starting to diverge here. Anyway, I don't like getting short in the hole anyway. I do want to talk about silver. It's starting to come out of here. So we had this short up here from 75. It was good for 70 cents. And then yesterday I said, look to sell a rally back to 65. The high of the rally was 65 and a half. So you had a nice break even into last night, and then you had another break to 10. So that was another winning trade that you should have pulled at least, 20 cents out, just part of its range. Now it looks like we want to break out to the upside. And you know what else we know about silver now? Look at all those hits at 27.10 and look at the prior high, 27.10. So, I mean, this is an important level for silver bulls. You don't want to be long silver anymore at 27.10. So the big question in silver now is when, I don't think it's if, we may take out these highs. I'll be looking at different TFs to see if we're confirming or diverging. Um, Gold snapped back pretty good too from that hot number on inflation. Almost made a new high here, and gold's not confirming. I still think that there might be a shot for one more short, because when you look at the gold, I know you can make a case for 1900 and 2000, but this 1850 level I think is going to be pretty tough in the gold market. 1848, 1855. We start clearing the 200-day moving average. You know, you can't fight it. But there might be a trade setting up here, silver as well, where they're not going to confirm at new highs. The gold silver ratio is trying to put in a bottom. I mean, all we're doing is grinding now. We had this huge move all the way from, look at where it was at the top. Yeah, I remember this day. This day you could have traded 1 ounce of gold for 127 ounces of silver. Now it's less, now it's half. Now you'd get 66 ounces of silver. But when I look at this, it looks like we could get a continuation for a third drive, which still favors silver over gold. Something like this, the beginning of a wedge down here. So some type of falling wedge there. And three drive. So it looks like we could fall under 60. The only other scenario is that we're going to continue this bounce for one more move to 75. But this looks more viable to me, that which will make gold your preferred short. Okay, it'll make gold your preferred short. I want to also prep everyone. I don't know anything else I really want to cover. The oil, um, even though crude is weak, I mean, stock indexes are weak, and NASDAQ looks like it's going to recover. When I look at the crude here, new highs look pretty good. I guess anyone on the East Coast having trouble getting gas because of the pipeline shutdown, but it does look like we'll have a third drive in crude up here. And that's going to be pretty important. This should actually be supporting the markets. I wouldn't be surprised with the market down if the oils are holding up better than some of the other markets. So uh, energy looks like it has another wave to the upside. But you'll notice I trade both sides of the market. I saw this up here and went for it. So I haven't done anything, I make the tough money and everyone else makes some windfalls. So we'll see what happens at new highs. To me, it's no touch until we get there, and a possible short, but with the pipeline situation going on, who knows? Um, the Dixie is trying to bounce back, but pretty good recovery, and now we're fading here in the euro. You guys wanted volatility, you're getting it today in the euro. That's not such a great looking candle in the euro. Okay, I mean, real nice bounce. So again, let me preach partial profits to you. So if you sold it here at 65, if you didn't take anything on the big break, here you are almost back to your entry. So I want to keep nagging you guys about taking partial profits. It will change your trading life because it will take more stress out of the trading for you. You're putting money in the bank. You're moving to less risk, if not riskless, by trailing your stop to BE. And if you want to have a long career as a trader, the best thing to learn how to do is to, besides manage risk, is to know how, is money management, for knowing how you transition from defined risk to less defined risk to no risk and then to profit stops. Yes, you can have a stop loss order that, when elected, is a profit for you because you've gone with it and you keep lowering your buy stop on a short position and keep raising your stop on a long position. Okay, so initially you have your original risk on the trade. Then after you take partial profits, even if it goes to your original stop, it's a BE trade. But if you trail your stop, um, it's a profit trade just to BE on your, say you do two units. I usually do one, about three. So, and then if the market's still accelerating and you have a piece on, you could move your stop up from break even to a profit stop. So, it's money management and psychology, and your psychology is always going to be better when you move from accepting the risk to de-risking a position so that if it turns on you, you still make money. Okay. I'm not saying it's easy to get there, but if you're there and you're the type of trader that puts on a trade and you're stubborn about a long-term objective and you'll just sit there, you're going to be giving away money that you could be ringing the register on at least part of your position. It's very important. So target hits. Okay. So I have a great guest lined up for tomorrow. Okay. I'm going to give you a little preview on this. In fact, Ben was with us on Trade Gate Hub about 6 months ago before we fine tuned the platform. And he talked about the grains and stagflation and has I mean, way back here, $4 corn, way down here in the beans, under, $9, $10 beans. They used to have a mantra at the Board of Trade, beans in the teens. They're going to have to change it to something in the 20s because teens are becoming normal. So he uses market geometry and cycle work. So make sure you're here tomorrow to hear Ben Maldonado. His Twitter handle is @BenMaldonado. So it's going to be, we're starting up to bring in um, very good analysts to give you some ideas, part of our mastermind of uh, not just what's within our community, but bringing other people in to share their work, to share their analysis and entries and timing, and you can integrate it into your own trading. Okay, so I do it selfishly because I get some great ideas from my guests. I've conducted well over 1,000 interviews over the last 6 years or so, going back to FX Street in their live analysis room. I was the host there, and on Forex Analytics the last 4 years. So I'm going to bring in my network of people that I've interviewed, and I'll cherry pick to bring in guys that I really think are going to add value um, during the course of our conversation. So be here tomorrow for Ben. Um, you know, this was a decent scalp in the dollar, a couple of good silver trades. You should still be long SQQQ. I mean, this may just be beginning, but again, I do believe that you have to take profits, and I took some partial profits yesterday. So, especially if you're in options. So, if you're an option trader, it was a double, the 12 call, you sell half. Okay. So, what happens when your long calls are puts and they double and you sell half? What's your risk on the trade? Your position's free now. They could expire worthless and you have no risk. And let's say I still like the trade, but NASDAQ rallies and the call, calls got cheaper, right? I can recommit with profits rather than principal. So let's just take one more quick look around. Silver's trying to hold. Gold's a little weaker than silver today. I still think there might be one gold short up from 1850. I mean, we almost made a new high. I think my preferred short's going to be gold after revisiting this gold gold silver ratio here. Okay. Um, Yields. This is what I opened the week with, right? I said the most undiscussed move was the recovery in the 10-year yield from the negative number, and said a pure play was, you know, short notes, short bonds, TLT on its way down, see if it's going to try and hold. But I was forecasting new high in 10-year yields. We're not that far away. And I think this will be the last push. And then we might have pullback in yields. And I think the reason for a pullback in yields will be risk off. Eventually, will be risk off. So there was no flight to quality at all during the sell off yesterday. That's not a good short-term sign for bonds. I mean, you had S&Ps down 40 and the bond market lower. Normally, when you have that type of flow out of stocks, they'll go into bonds for safety. The thing that held up the best early in the week was gold, and still, not acting bad. It held up better than silver, but silver is still not bad. Write down this number 2710 in silver, because if you're one of these long-term bulls looking for 50, 80, 250, whatever in the silver, one thing I could tell you for sure, okay, and there are a lot of things that aren't for most things, and you know what, this isn't either. But I would be very concerned to see silver trading back under and closing under 2710. So, write that number down, silver bulls. You do not want to see 2710. Doesn't mean it's the end of the bull market, but means that there, could be a possibility that after this rally and we start taking out 2710, that we could see 23 and a half again, maybe something like this from here. So be careful with that. So I'll see everyone tomorrow, and we're going to be talking cycles and market geometry. I don't know about you guys, but in high school, really liked a parallelogram. Who remembers a parallelogram? Anyway, just a little, one formation, one geometric shape that I remember. So I'll see everyone tomorrow. I'll be with Ben Maldonado tomorrow. Spread the word. Um, Ben has a great look, cycle wise, and some interesting analysis that you don't see everywhere. And more than that, everyone, hope you caught a little bit of that fade after the number. I will be posting in here. If you're watching on YouTube, I don't post under the video. I post in here, TradeGate Hub. I just want to remind everything that trading is what we do. It's not all we are. And to not just count your pips, but count your blessings. Adios, everyone, and I'll see you tomorrow. Good hunting.